So this week, what we're talking about is what the Federal Reserve is trying to do. What are they trying to accomplish, and how are they accomplishing the things that they have to do? So unless you've been under a rock for the last 2 years, you know that inflation, everything is really starting to pick up in regards to prices, food, cars, used cars. Remember used cars last year? Gasoline, oil, energy, everything, housing. And so the Federal Reserve, their biggest thing is we got to stop all this. And the biggest headlines that we have is housing. So what they're doing is let me put it this way. Is what they're doing starting to help? Well, here's today's headlines. Home prices weakened in June, but we're still much higher than they were a year ago. That freaks the Federal Reserve out because they want to take a chunk out of this as much as they can, as fast as they can. So let's put some of this into context so you guys understand what's going on and what the Federal Reserve's remedy is. That's what we're talking today. And then tomorrow we're going to talk about how they plan on analyzing the results of what their remedy or their cure is. So let's dive into the data. So we go over to this website and we find what is a part of the CPI, the Consumer Price Index, aka inflation, that the Federal Reserve is really concerned about. So we have right here, additionally, a large part of the Federal's targets CPI measurements take into account rental and housing costs in order to rein in inflation. Shelter prices as a component of CPI needs to come down. That says it all there. So let's go over to, this is actually Notre Dame's Econ 504 book. In its simplest terms, let's figure out what causes prices to go up and down. So we can see right through here. And in a decrease in demand will cause a reduction in equilibrium prices. So basically a decrease in demand will have prices go down. An increase of demand will have prices go up. Conversely, the other side of this coin is supply. So as the supply goes up, prices come down, and as supply goes down, prices go up. There's a reason why I'm telling you guys this, folks. So just hang on, you'll understand this more in a second. So the Federal Reserve, here's what we know. Over the past few years, the Federal Reserve has been buying, so increasing the demand of mortgage-backed securities. This is how much they've been buying. Look at this, all the way up to $2.72 trillion as of May of 2022. So this is from 2008 to 2022. So they're increasing their purchases. So what are they doing? They're actually increasing the demand. Okay, they're increasing the demand, which is going to cause something to do what? Well, it's going to cause the prices to increase. Okay, so that's what we know there. So how's this going to affect mortgage rates? Well, again, why are we in this trouble? Well, it's because we had free money from the Fed and free money from our government way too long, thus created way excess demand and supply. As we know with the supply chain, we have reduced supplies. So if you have excess demand and reduced supplies, as we know in our Economics 504 book from Notre Dame, that's going to cause prices to spike. Okay, so what's going on now? How's the Fed's, what's their remedy? Well, they're going to stop buying the mortgage-backed securities and start selling them. Here's how much they're going to sell and when. So in June of 2022, just a couple months ago, they started selling. It didn't really have much of an effect on the markets, or as much as an effect as I thought it was going to be, but they're doubling down now in September. So here's the chart that we have right now. This is how they plan on selling off their mortgage-backed securities. If you can see in September of 2022 right here, they are doubling their selling of the mortgage-backed securities. So let's put some of this in the context. If you look at this, you're going to say, okay, we're going to have less demand because the markets aren't really buying mortgage-backed securities. Now the Fed isn't buying mortgage-backed securities. But on the flip side of this, the Federal Reserve is actually stepping in and selling. So if we go back again to our economics book, if you have excess supply, let's go down through here to make this make sense to you. An increase in supply will cause a reduction in the equilibrium price. So it's going to make prices go down. Just that alone, them selling more in the market, is going to make the prices go down. Well, what do we know in regards to the MBS market or any bond market? As the price goes down, the rate or the yields go up. That's how bonds work. Let me put this in the context for you, just make it as simple as I can. So let me explain it this way. What happened over quantitative easing was the Federal Reserve was jumping in, buying and buying and buying mortgage-backed securities. They were driving up the price, okay? How bonds work is there's an inverse relationship, and here's how it works. Let's say as the price goes up, your yield comes down. Let me make an example for you. Let's say I have a bond or the mortgage-backed security note that's worth, when I turn it in, $100. All right. So today I pay you $50. So a low price. So today I pay you $50. Next year I hand you back that bond and you give me my $100 back. What was the yield? Well, the yield was 100%. I doubled my money. Okay. So now let's drive up the price like the Federal Reserve did over the last few years. They drove up the price because of the demand. So what happens now is I pay you $100 for that bond. Next year I hand you that bond, you hand me $100 back. What's my yield at that point? It's not a trick question. It's zero. So do you understand? At $50, when I paid you $50 for that MBS coupon, I got 100% return. When I drove that price up, what the Federal Reserve's been doing for years, when I drive that price up, it brings my yield down to, as my example said, 0%. So you can see how as the price goes up, the yields come down. Well, we're seeing an inverse relationship right now. We're seeing the Federal Reserve not buying and actually pumping in more supply into the economy. Thus, it's going to drive down the prices dramatically and rates up. So I'm expecting in September, rates are going to start pushing up just because of this alone. Well, so far today, we see basically a steady MBS market, which is good. Again, as the price goes up, rates come down. Here's the chart right here. This is what's happening right now as we speak in the MBS market. This is live. So the MBS market is down or up to, basically it's zero. I'll put it that way. But yesterday we got crushed. Yesterday, what happened? Well, we saw mortgage rates spike. I thought they would go up at least about an eighth, but that was in the morning. We got across the board right through here. We got at least an eighth, and in some instances, maybe even almost close to 0.25% rate increase. So what is this rate sheet? Well, this is the top 6 products that Mortgage News Daily publishes on a daily basis. What they do is it's a survey of mortgage lenders all over the country. So this isn't one rate sheet. This isn't my rate sheet. This isn't any bank's rate sheet. It's basically the national averages in regards to this scenario. So what happens is Mortgage News Daily sends out a survey to mortgage lenders all over the country and says, if you have a person looking to buy a $500,000 home with 20% down, a 720 credit score, and it's going to be their primary home in a single family residency, there's a reason I have to do that, legal issues, here's the rates. These are the top 6 products that are used when people are buying a house. Okay, so you see the 30-year fix went up almost 0.25% just yesterday alone. The biggest or the littlest impact was felt on the ARM rates. Look, we have ARM rates the same right now as fixed rates. So these are where rates are today. So if you like my channel, all I ask you to do is do a couple things for me. Give us a thumbs up, subscribe down below, and the other thing is check out our website. Here's my website. It's therateupdate.com. If you'd like to find out more about me and my team, how we might be able to help you, all you need to do is check this out. Also, don't forget to check us out on podcasts. Just look up Dan Frio or The Mortgage Update with Dan Frio. We have podcasts going out every day as well with this same content and more. So God bless, guys. Thanks so much for watching. I'll be back tomorrow with the same exciting news for you.